All right, good deal. So again, good evening. This is our Trading 200 class on Zoom by Team Wealth Builders on learning structure. Tonight we'll talk about flags, recognizing flags, support, resistance, and proper risk management. Okay, let's get into this. So tonight what we're going to do is we're identifying the basic structure, tools, and patterns, okay? And of course tonight what I am going to go over are, number one, what are flags exactly? I know you've heard Doug talk about it, and I always want to make a reference to Mr. Stevenson Lindor. He is the person that I have learned structure from. He is I'll say one of our number one IML educators here in the IML Academy that will teach you proper structure. So when you can, again, this is just a mere introduction so you can understand the basics, but please get into your IML TV and watch Stevenson Lindor. Also, Mr. Derek, Christopher Derek is also another one that teaches on structure, and I'm sure there's a number of other ones also. But again, Stevenson Lindor is who I learned from, and that's what I'll share tonight, okay? Number two, we're going to talk about what are impulse moves, okay? What are impulse moves? These are going to be your embellishing candles, okay? A bearish candle and your bullish candles. We're going to go over that, okay? Properly identifying resistance and support levels, okay? And understand that these are zone areas that you need to pay attention to, because I understand a lot of times if you're using the cloud, if you're using moving averages or other things of that nature, a lot of times you're wondering, well, I'll jump into the trade and I'm thinking it's going one direction, and then all of a sudden it turns to the other direction, and I thought that it was going in a sell when all of a sudden it hit this area and turned into a buy. Well, a lot of times, ladies and gentlemen, we kind of ignore support and resistance zone. So we want to talk about that, because an indicator will show you what's happening right then and there, but your resistance and support levels will help you in advance to kind of pay attention to where the market could turn, okay? Next, we're going to identify trend lines, so you can properly identify trend lines. And so when it breaks a trend line, it gives you another a clue or indicator that it may possibly be turning in a reversal, okay? And then we're going to talk about something a little bit, I don't know if you've gone into it, but identifying channels, okay, channels, ascending and descending wedges. So that might sound a little different, a little advanced, but once I show you pictures of that, ladies and gentlemen, you will go ahead and understand exactly what we're talking about again. And so again, this is for your basic structure right here, okay? The next thing we're going to talk about, because I know this has been confusing before, is understanding the proper time frames to mark up your charts, okay? So what we're going to do is we're going to take a look starting from the weekly time frame, then we're going to the daily time frame, then the 4-hour, and then of course the 1-hour time frame, and possibly the 15 minutes for possible entry. So when I talk to you tonight, I'm going to show you the strategy, or at least the steps that I do as far as starting to mark up the charts, and where is the time chart that I will properly enter into a trade and when I can get out of a trade, okay? Okay, so I will go over this again, but just as a basic outline on how to properly mark up your chart, this is what we're going to do. And I'm going to keep this up here if you're taking notes, and we'll go over that. But number one, what I do is I start looking at the weekly or the daily time charts, okay, and I outline my support and resistance lines, okay? Now, there has been some discussion as far as, well, what about the weekly? That's so long. Generally, what I do, ladies and gentlemen, is I look at the weekly to kind of just give me an all-out direction of where the market may possibly going in the future, okay? And we do that by looking at the past, of course, and we can see what last year around this time, what maybe the market was doing. And then what I'll do is I look at the daily time chart, okay? So where I primarily mark up my support and resistance, my major, there's a difference. There's a major support and there's minor support and resistance. So I'm going to talk about that tonight as far as the difference between a major support level and a minor support level, okay? And I typically start to draw that on the daily time charts, okay? So I look at the weekly to just get an idea in my mind as far as where the market is going, but I begin to start marking up my charts on the daily time chart, and then I'll start to go down from there, okay? And then, of course, we're going to mark your trend lines, okay? And, of course, this will give you an all-out direction of where the market is going so that you can have a better idea of your sells and your buys, okay? And then what we'll do is we'll drop down to the 4-hour, 1-hour charts to mark up our secondary or our minor support and resistance lines, okay? Our minor support and resistance lines, okay? And then, of course, I will identify your possible entry points and your take profits in your zone areas, okay? So you'll hear other terms also called naked trading. You'll hear Daisy Duncan, she talks about that, and she introduces naked trading. And this basically is what you're doing. You're identifying your support and resistance lines and your trend lines, and then from there, you're kind of jumping in and out of the trades there, okay? But we're also going to add another piece of the puzzle, and that's we're going to add the RSI indicator, okay? And so we will look at your RSI and other possible indicators that you could use for confirmation of overbought and oversold markets, okay? If you're using the Ichimoku cloud, I know that's kind of new. You can use that. That's also several indicators in one. But what I will have you do is pay attention to structure inside of the Ichimoku cloud if you're using that in tandem together, so that now when you see it reach certain points, you understand why it may be turning direction or why it may be consolidating at that level, okay? So that's what we're going to kind of go through there. So this is just an outline of what we're going to talk about tonight, okay? So please don't be intimidated by this. Don't think this is way over your head, because when I introduce these things to you, I promise you this is very, very basic as far as understanding the structure or the foundation of your charts, okay? And please remember that the market only moves in 3 directions. It either moves up as a buy, it moves down as a sell, or it stays in the middle as a consolidation, okay? We call it ranging market or a consolidation. And that just means that it's bouncing, trying to find balance in the market, okay? And so the market is always consistently trying to find balance, okay? That it goes up and then goes down, goes up and down, and it stays within a certain zone area, okay? But then, of course, when it's unbalanced, okay, is when the market starts to shoot up for a buy, or it's trying to go down as a sell. And this, ladies and gentlemen, is where you're going to make your money. You're going to make it when the market is unbalanced. And so another thing that we've been told is that 80 to 85% of the time, the market is going to be in balance. It's going to be ranging or consolidating 80 to 85% of the time. With the other 20 to 15% of the time, it'll be either an uptrend or downtrend. Okay, so what does this tell you? It tells you that, number one, you don't have to be in a whole lot of trades, okay? If you can identify the trend and finding out where it's going from one zone or support area to a resistance area, or from a resistance area down to support areas, well, now this is where you're going to make your money. And you'll get a very good peace of mind once you mark up your chart just a little bit, and now you'll see it going downward, and you can have confidence. Now you're not sweating the market. Now you're not uneasy about where you believe the market may go. Okay, this is why you want to understand structure. Now, indicators will help you give what I love to say, the warm and fuzzy, that if you see these certain indicators, it kind of gives you confirmation of where of what's happening in the market at that time. So we're going to talk about some confirmations there, okay? So let me give you some examples of flags and other things so that you guys can really, really get an eye for this and understand what we're looking at. So what I did is I jumped on Stevenson Linder's class, again on Imarkets Live TV. And again, you must be a member of Imarkets Live TV to access our full education. And from there, I was able to take some screenshots because that was the best examples I could show you so that you can understand how the market really moves, okay? So here's what we're looking at now, okay? So basically what has happened here is we first made a resistance line on the top, okay? And so let me define that first. So a resistance line or a zone, this is actually a fictitious line, okay? It doesn't mean that, yes, the market is going to hit this area for certain. Somewhere in this area, we mark it as a zone, okay? A zone. So it may be anywhere from 5 to 10 pips high or low. Okay, 5 to 10 pips high or low. But we give this line just as a reference point. And we mark this at the top of the chart because this is where price Okay, when I refer to price, I'm talking about the candles. Okay, the candles are a physical representation of price. So instead of staring at the numbers on the left side or the right side, you have a candle that shows you where the opening price and closing price is. And when price goes up and down, it gives you a color. So green will be that it's moving up. Okay, that price is going higher. And then red will give you candles that it's going down or decreasing in price. Okay, and so what happens is when price is going up, it reaches a certain area, and for some reason, it will not pass a certain price. Okay, this is what we call resistance. It goes so high, and then what happens is it rejects that area. It bounces off that ceiling, okay, and then it comes back down. If it rejects or bounces off that ceiling at least 2 to 3 times, that's where we start to say that there's resistance in the market. And so if you look here at the top, basically over here, we're going to start from the left. You see that the market went up, price went up, and it slightly went over this yellow line, but it came back down. It came back up again and shot just a little bit above it, but came back down again. Then it came back and it touched the yellow line and came down. And so you see the market came all the way down. It hit this bottom area, which is actually our support. This is where the market hits the bottom. And then it started to climb its way back up, and then it hit this level again. Okay. Can you make the picture larger? Let me see if I can. I don't know. Yes, I believe I can. There we go. Let's see. Okay. There we go. So I hope that helps. Well, it doesn't want to stay that way, huh? Let's try it one more again. Okay. So let's see if that will stay. Nope, I guess it won't stay for me. So, all right, so the price will hit this top area right here, this line, and then it bounces off of that. So I apologize I can't make it bigger, but really what I really want you to just pay attention to is this yellow line across, and just that the candles are hitting this area, this certain area where it rejects and it bounces back. So this is our resistance line. This is a zone area that the market will not pass. And so why is this so important, ladies and gentlemen? Because this is an area that we need to pay attention to, because this is where, if we're going to get into this trade, that most likely, looking at the history behind it, that it reaches a certain area, and past history has shown us that it is actually bouncing off that certain zone area. Okay. Okay, so there we go. I just want to check to see what, don't act up here.
Cannot hear you, Shawn.
Oh my gosh, thank you. Okay, can everybody hear me now?
Yeah, you've been muted for a while.
Oh my goodness. Well, let's back this up then. Okay. So we jump back on here. Let's back it up, okay? So again, I was talking about that our support and resistance areas are here, and basically why is it so important that you understand your support and resistance, your ceiling and your floor, your ceiling and your floor, because this will help you determine where you're going to possibly get into the trade. Okay, so just think of this as an elevator, or excuse me, as an escalator. Okay, you get in on the bottom, well, you want to get off on the top. Well, if you get in somewhere in the middle and the escalator is headed up, well, now you know that, okay, I need to jump in this for a possible buy. okay, and ride it to the top. But if I hit this resistance area, if I'm aware that there's an area where price has bounced off of in the past, then most likely the chances are that it may just reject this area and go back down, where you would probably take your profit here and then you'll wait, okay? You'll want to take your profit before you hit this resistance area, and then you want to wait to see if it's going to break through and go higher, or if it's going to turn around and come lower. And if we look and see that it comes back down, and that's what we'll identify with embellishing candles. That's a clue to tell us where the market may be going. When we see it break back through this resistance, then we can find a point to enter back into the trade and ride it back down, okay? So this is why it's important to learn what resistance and support lines are for, okay? So that's what that's talking about, okay? The next thing is we're talking about trend lines, okay? A trend line. And so basically a trend line here, and I'm gonna go through some other examples, is basically where the trend line is touching. If it's on the bottom right here, you'll touch, the line will go from the bottom here, the very low of the price, and it'll touch these areas that makes a line, kind of like an invisible line, all the way up, okay? And this is what you want to pay attention to, is what is the trend? Is it headed upwards or is it headed downwards? Because by identifying the trend line, when it breaks that trend line, it kind of gives you another clue or another confirmation that the market may be turning. So that's just one slide. And the last thing is, let's really look at this. Let me see if I can blow it up one more time, is flags, okay? We had a little confusion about what exactly is a flag, okay? And I hope I can blow that up there. Let me see. So I'm gonna leave it there, but if you see over here on this right side, you see these yellow lines here? These yellow lines? Somebody say yes if you can see these yellow lines here.
Yes.
Okay, good.
Yes.
These are flags. This is what you identify as flags. So, okay, if you say, Shawn, what is a flag? Let me define that. So the market will make a strong move in a downward or upward position, and that strong move down or up is the flagpole. Think of it like the American flag. It makes a pole, flagpole here. And then what happens is it makes a little flag. It pulls back, okay? Now, if you notice, it pulls back at an angle, kind of like a race flag, like a race car flag. It pulls back right there. This is what a flag looks like. And what this does is the market is correcting itself. Remember, I told you that it's always constantly trying to find balance. Well, what happens is it's just like in a grocery store. People are buying, and then somewhere somebody is selling. So it's a back and forth game. So when the market reaches a certain price, people say, oh, this price is really, really high, and I believe if I sell it, I could go ahead and make a profit. So people start selling it off. But when it gets so low, people start buying it again. They say, oh, it reached a good price. I just got in the market kind of late, but it seems like this is a good price. So I'm going to start buying. So people start buying. And that's basically what's happening in the market. People are buying and selling, and it's battling each other. And so what happens is it pulls back. The market kind of pulls back. So then it comes down again. People sell. And then here's another little flag. It pulls back. Then people sell. And this is another strong candle. And then it pulls back. Goes down, pulls back, goes down, pulls back. So you see it's a pattern. So by looking at it forming a pattern, you can kind of see the market in a rhythm. It's in a certain rhythm. And that's where we're trying to figure out, well, when exactly do we get in? Okay. And that's what I'll show you in a little bit. If you also look at this, the flag pulls back, but it pulls back to a certain point where you can make this trend line. This is that solid yellow line on the outside where my arrow is. This is the trend line. It started at the top and it's here going to the bottom. And what we're looking for is if it hits this bottom where the bottom price touched here at the very low and made a support. This is the floor. This is the bottom of where prices hit before. We're waiting to see when it gets here, is it going to continue in that trend and go further downward, or is it going to turn around? Okay, so when it gets here, we're going to wait for the flag. We always wait for the flag. I want everybody to write that down. Always wait for a flag. Always wait for a flag. Always wait for a flag. Okay, the flag is kind of like a knee-jerk reaction. It's kind of like, you know, you hit somebody, they say, ouch. Well, when you hit somebody, you're waiting for the ouch. Okay, so it makes a move in the market, a pretty strong move, sell, because it's still going down, and then you're waiting for the ouch, waiting for the reflex. And that's what happens. It does a reflex. Okay, and so when you wait for that reflex, that pullback, that's kind of when you know, hey, this might be a chance that I may get in the market. Okay, so I'm just going to stop there. Just so, does everybody see the flag? And now do people kind of understand what a flag should look like? I'm going to show some more examples, but do you at least have an idea? Okay, I see you marking on my chart, so I guess that's a good thing. Oh, don't want to rotate it. All right, so let's get off of that. And let's go to something else. Let's move to another picture. And let me see if I can stop share and share again so I can clear my screen. Okay. So here is another chart right here. And let me see if I can blow this up a little bit. Okay, so what this shows is this is a clear, we did the yellow line on top is our resistance. This is where market has touched 2 or 3 times and said, oh, I can't go any higher. It keeps rejecting in this area. So this is a strong area right here of resistance. Well, now we're looking for the trend. So what happened is the market came back up here at the very top and it started pulling back and making these flags. This is what these lines are. This is a flag. So I'm sorry, right here where you see my arrow kind of going in circles, this is where it had an impulsive move down. It made a sell. It touched the ceiling and said, oh, we're not going any higher. We're going to come down for a sell because now the market is probably going to reverse. So it reversed and it came down. Then it made a flag. It pulled back. Okay. And then it came down. And these here, if you can see, now what's the difference? This is an angle upwards. This is how you kind of know that this is a flag because it's angling differently. It angles at a 45-degree angle. This right here came down. It didn't angle at a 45-degree. It still was coming down. So we can kind of consider this kind of as one move. And then it came as an angle again. So this is another flag. Then it pulled straight down, came at another angle. This is another flag. Come down, it's another flag, and then came down and made a bigger flag. And now it's shooting down here. So guess what we're waiting for, ladies and gentlemen? Another flag. But this time, we're waiting for the flag to see if it's ever going to break this trend line. That is a clue that it's going to possibly reverse. Possibly, I do say possibly, okay? So you say, Shawn, when do I get in? Okay, that's the big question. Well, we'll get to that in a second. But right now, I want you to understand that the market, it does a move and then it has a knee-jerk reaction. It pulls back. And that pullback is what you're looking for to find out what direction the market may go. Okay. Now, I'll also look down here on the bottom. We have the indicator of the RSI. Okay. So the RSI is a simple indicator, and the purple shaded area right here is basically the top and bottom. Okay. And so what you're waiting for is if this line is very faint, I'll show you on another slide, but if it goes over this top dotted line, that means that the market has been going in an upward momentum. It's been heading upward for a buy. And when it goes over that line, it's going to run out of steam and it's going to start to come backwards. Okay, that's when people say it's overbought, that people kept buying, buying, buying. It went so high, now it's ready to turn around. Well, that's a clue for you. That's a clue that if it goes so high and it starts turning downward, that we're possibly ready for a sell. Well, here's another thing. It works on the opposite. We see that this line is very faint, but it's under the dotted line on the bottom of the purple. So what that means is it's oversold, that it's been selling, 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 pushing the price all the way down, and now it's under this line. Well, guess what? It's running out of steam, going down. Now it's ready to turn up. And that is a clue or an indicator or evidence that it's ready to possibly turn in the opposite direction. Okay, so now we're using structure and we're using an indicator. So we already see it going down. We already made our support, like this was the floor. So this is evidence to say, you know what? In the past, it kept bouncing off of this floor, So it's very possible that it probably will bounce again. Well, what does the RSI say? The RSI says the momentum is starting to slow down, and see, now it's starting to turn around. So there's a very good idea or very good perception that it may start to turn around in the other direction. So we want to pay attention. It doesn't mean it's time to get in yet. It just means we need to start paying attention. All right. So that's what this slide talks about. Let's move on to something else. Okay. So let's go. Okay. So this one is on a 4-hour chart. And we made a trend line. This is what this one line is. It's a trend line, okay? And so what we're waiting for is the market pull down, made a flag. That's what these yellow lines are. It's a flag, okay? You see it's at an angle. It's at a steep 45-degree angle. It comes down again, kind of makes another flag, comes down again, and now it's making kind of a longer flag, okay? Kind of a longer one. It's more consolidating right here. Okay, and so it starts to turn into something else. It's not really a flag anymore. It's starting to consolidate. And what we're waiting for, though, is, hey, what direction is this thing going to go? Like, is it going to go up or is it going to come down? Well, what we're waiting for is it to pull back to this trend line. Think of the trend line like a magnet, okay? Price will always kind of go back to that same area. Just like it did up here, it kind of came close to the trend line, went down, came close to the trend line, came down. We're waiting for it to come to the trend line again, okay, like a magnet. Until it breaks that magnetic line, we're not sure where it's going to go. So right now it's bouncing around, and this is a secondary trend line. You don't have to really know that, but when Stevenson Linder was talking about this, he made kind of a smaller secondary line here, a trend line. And so what we're basically waiting for it to do is it going to break this trend line and go higher, or will it break this trend line and go lower? And the big part is this resistance, this support line, this floor. So we're really paying attention to two things. We're paying attention to the floor if it's going to go lower, which means we could jump in it for a big sell to go downward, which could make you hundreds and hundreds of dollars. Or we're waiting for it to push back up, okay, and break the trend line, which is an indicator that it's reversing, that it's starting to change direction. If that's the case, then we could jump in a buy and make hundreds of dollars going in the upward direction. But either way, we want to look for the clues, okay? The chart leaves clues, and we want to start being like investigators. We want to start looking carefully for the clues. And the whole thing, ladies and gentlemen, is as you start looking at charts more and more again, and you start identifying what flags are and what certain candles are, you'll start to see, it'll start to pop out to you. It'll start to look pretty easy after a while. And that's really what I want to do, is I want to introduce this to you and have you looking over and over again until it starts to become kind of second nature to you. All right. So now this is some gibberish here. I know you guys are like, what is this? Well, this is on a 15-minute chart. It was a little smaller. And these are examples of flags here too. So here's a trend line, this big trend line that comes across the top, okay, right in the middle. That's one major trend line. And what happened was, on a higher time frame, this is probably on an hour, Mr. Linder made these flags on a higher time frame. So when he dropped down to the 15-minute, we started to identify these smaller flags. Okay, so this looks like a real flag now. Look, a pole comes up, and then boom, boom, here's a flag. A pole, boom, boom, here's a flag. A longer pole and another flag, and then it keeps going up. So you're saying, Shawn, how does this help me out? How do I understand this? Okay, so let's say you wanting to get in this trade. You said, look, I kind of want to get on. I want to get in this trade, but I'm really not sure where I should start getting in. We marked up a trend line, and what we're waiting to do is we have to wait to see, is it going to break the trend line? So it did. It broke the trend line, and once it shot up, we knew that there was going to be another flag. Why? Because that's that reaction. That's that knee-jerk reaction. We punched them. We're waiting for the ouch. So the punch moves upward. Boom, we wait for the reaction, which is a flag. And then, boom, we jump in after it starts to push back up again. And this is how we're going to jump into the trade. We wait for it to break the trend line. We wait for a flag. And then we go up and we ride the escalator on up again. Let me try to see if I can blow this up just a little bit because I know it's small. Just a little bit. Okay, not perfect, but again, these green candles move up and it says flag here. This makes a flag. Here's another one. Here's the flag. And here it says wait for another flag pattern to form before you get in. So once it broke this, you would probably jump in after this flag, or you could wait for this flag and get in. And I'm going to pull up a trading view chart because I know this is images. So I'm going to show a chart that's naked, and then I'm going to mark it up for you. And then we're going to kind of look and speak to you guys and see where you believe that the chart, where the price may be going. All right. This right here, and I'm just going to touch on it real quick so you understand. This is what we call a descending wedge. Descending wedge. I want you to write that down. Descending wedge. W-E-D-G-E. Descending wedge. Okay. So a descending wedge is a little different from a flag. Okay. This is where it consolidates, but it consolidates on an angle. Okay. So, for example, this trade was going, all right, and then all of a sudden this big red candle came out of nowhere. This is what we call an embellishing bearish candle. It embellishes the other one. It covers over the candles that were before it. So it's a strong impulsive move. This is what we call an impulse move. So think of it like an explosion. It's an impulse. You know, it's looking all normal. You see all the candles about the equal size, and all of a sudden, boom, you see this big, strong candle. Well, that is a sign that, yes, it is headed in a down direction. And that's what happened. It came down. It started to make a flag. That's what this little line is. It pulled down again, made another flag. But what happened was it started zigzagging right here. So this is a descending wedge. It's kind of a bunch of flags all together in one area. But we also had wrote down our support line down here. This is the floor. This is the bottom. This is where price had bounced in the past 2 or 3 times to let us know that, hey, it's a possibility it may jump in the other direction. Okay? So what we would do is when you see a consolidation like this, where it's kind of bouncing like a pinball up and down, and then it hits this floor, this is a clue that it's going to shoot up into a buy. It's a clue. If it's the other way around, it's also a clue that it would come down in a sell. If you saw this angle kind of going the opposite way, if you saw it headed upward in a 45-degree angle instead of downward, then that would be a clue that it's headed for a sell. Okay, so this is just something to pay attention to. It's called an ascending, or excuse me, a descending wedge. Okay, it also has an ascending wedge. So descending wedge and ascending wedge. So I want to kind of give you an example of what it kind of looks like. It's different from a flag because it's a bunch of up and downs that's right in a little channel. This is also a channel. Okay, and when you see a channel, it's bound to turn. It's bound to shoot up the opposite direction of how it's angled. So this one's angled downward, so it's going to shoot up. If it was angled upward, then it would shoot down. Okay, so here's that bigger example here. So it came here, here was a wedge, it hit down to this area, and then boom, it shot up for a buy. And that's exactly what it did. It came up, shot upward for a buy, hit a resistance on the top, it rejected up here, and then it came down, and then it made these red candles. This is an impulsive move. It made a series of red candles. Boom, it shot up, and then started to come further down for your sell. So another thing is look at the RSI on the bottom. Let's look here on the bottom. This is another clue, as I told you. Look, it hit the bottom of this dotted line, which let us know also this is an indicator that, hey, this is possibly ready to turn around. So when it touched this bottom line, look what happened. It shot up just like it did, and look what it did. The RSI came up and shot up to the other dotted line. And then when it came over the dotted line, what did that do? It came down as a sell, which is what it did. It started to come down as a sell. So the RSI is a great tool to kind of give you extra confidence as far as where the market may be headed. Okay, this is just another example of a flag. Pole comes down, and see, it comes as an angle. It's coming up at a 45-degree angle. That is an example of a flag. This one's going up and it kind of comes as an angle. This one is another flag and then it shoots back up again. So this is kind of how a flag will look. Just examples to kind of train your eye a little bit. It does take time. It does. Okay. This one shot up and this one is an ascending wedge. See how it kind of bounced right in this channel? This is a channel, how it marked up like this. It's a channel, or also one bigger flag. I'll just say that it is also a flag, but it's a bigger flag. It's longer. So this one channeled and bounced around, and look, what we're waiting for it to do is to shoot down and touch this trend line again and possibly go back up. Is there a certain number for the RSI to know what the market is doing? Great question, Keisha. So at the top of your RSI, there is the 80 line and the 20. I believe it's the 80 and the 20. Okay. Or I'm sorry, actually it's a 70 and 30. I keep getting that with the stochastic. So it's a 70 that shows you that it's overbought, and the 30, which is the oversold. So when it crosses over this 70, that means it's ready to turn around and come down for a sell. When it comes under the 30, yes, somebody said something? Okay. When it comes under the 30, then it's ready to turn around and come up for a buy. Okay. So that's kind of what the RSI will help you with. Let's see any other example. I think that's my last example there. Okay. So does anybody have any questions as far as looking at a flag and what a flag may do? Let's go back just so you can take another picture or take another look at flags. So again, these are kind of smaller flags here, pullbacks. Anybody have any questions?
Hey, Shawn. I have a question. This is Nakia. Does it matter what time frame you're on?
It does not. It does not. On all time frames, the market moves, or the price will move in that certain way. All of this will be very similar from the 1 minute, 5 minute, 10 minute. It all works the same way. Price will always move that way. It'll never be a straight line. It'll always be a push up, then a pullback, push up, pullback, push up, pullback, push down, pullback, push down, pullback, push down, pullback. Same thing. And this is what we'll talk about as far as when to get in on certain trades. So let's look at that. I think I did have a screenshot of that. So let's see.
Shawn, I have a question.
Yes, ma'am.
Are you going to show us what the flag looks like with the regular candles?
Yes.
Okay. I was just checking.
Okay, no problem. I will definitely start on a naked trading view chart, and then we'll kind of mark one up together, okay? So here, let me see, make sure I got it. Okay, good. So this is what I was looking for. I did have another screen. So now, what I do want to talk about is when to enter into the trade. That's the biggest question that all of us have. When do you properly enter when you're seeing pullbacks, when you're seeing a flag formed? When do you get in? Well, ladies and gentlemen, there's two times that you could decide to get in. All right. So the one time is I'm going to start over here. Let me see if I can still pull this up. Okay. So I'm start over here right under where it says euro. When the market pushes down, okay, let's say you didn't catch this, you didn't catch that, and you just look at euro JPY and say, oh, this looks like it's headed downward. Let's say you have the Ichimoku cloud is red and it's showing downward. You still have to find the right timing of when to get in. So the two times that you could get in is number one, when it goes into a flag and pulls back to the trend line. See, because remember, we're going to mark up our trend line. When it does a pullback, okay, it's a smaller trend line. Okay, so it pulls back and there's a smaller trend line underneath it. Okay, the flag makes a smaller trend line. Okay, this is on an hourly chart. So let's just say, boom, it pulls back and it starts to make a flag. Well, underneath that flag is a trend line. When it breaks that trend line, okay, that's when you'll get in. When it breaks that trend line, when it comes back down to a sell and it breaks that little line. If you miss it, then what you'll do is you'll get in when it breaks this low part here. Okay, remember it started here, it pushed down, and then it started to reflex. It said ouch, and it pulled back. Well, this low right here, if we come across, look, when it breaks this low, this is where you get in. You'll get in when it breaks this. So you can either get in when it breaks this flag, when it starts to break the trend line underneath the flag, or you can get in when it breaks this low of where this price was. Okay, let me say it again. Price comes down. This is a impulse move downward. The red candles, boom, it comes down. That's an explosion down. So that gives you an idea that the market is reversing. You had already made your trend line, so we're going to try to follow that. So it comes down and then it pulls back. When it pulls back and makes this flag, you're going to see a trend line underneath it. You see it touches here, 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 and then here. So you can make a nice little line. When it breaks that line, you can jump in. So you would jump in right around this area. If you don't make that one, which is fine, this low price right here, where it first came down and started the flag, when you come across, when it breaks that area, you can get in there. So I would get in here, and yes, I would go in drawdown. I would go negative. But I'm confident that it's not going to break this trend line. It's going to continue going down. And so it'll come down, and I'll be in profit, still stay in it, go down, pull back, go down. And as long as this trend line holds, you can stay in this downward trend. You can stay in it. And that's kind of where we have to build confidence at, is that a lot of us get scared, obviously, when it pulls back. But if we see that there was a trend line and it held over here, then it starts to hold again. Well, now we're confident that it's going to probably stay. But here's another thing. Every time it pulls back, you can jump into another trade. Okay? So let's say you missed this. It came down to this line, pulled back as a flag, and you jumped in here. Okay, cool. I jumped in there. So now I'm riding it down. Boom, I'm in profit. Oops, it's pulling back again. So I make another trend line. So, ooh, it broke this trend line. So I'll put in a second trade. So now I'm in two trades, and now they're going down, and I'm in profit. Comes all the way down. Boom. Okay, guess what? Now it pulls back again. When it breaks this trend line, I can jump in for a third trade if I like, and I can keep riding it down. Where I would get out is at the trend line. If it reverses and goes back up, I'll just get out when it goes across this line. I'll wait for it to go over it, pull back, and I'm going to get out. And I could probably jump back in for a buy, because now I have confirmation that it broke this line and is possibly reversing. So I know this is a lot of information, ladies. Again, I want you to be able to replay this again and again until you get it. And also, again, plug into Stevenson Lindor, because he goes over this hundreds and hundreds of times until it becomes second nature. But I definitely want you to see how you can jump in to certain trades and how you can use your trend lines and your flags. All right. So now let's go to a naked chart. I'm going to get out of this all together. And let's look at a pure naked chart. Let's close these things. Okay, let's go there. Let's go to our trading view. Again, if you're new to TradingView is a free platform that you can mark up charts with, and it saves your notes. And of course, a lot of IML educators use the charts like that. Let's expand the page and let me share the screen. Woohoo, TradingView. And I'll probably change the background, because I know before a lot of people said I can't really see your background. So let's change the color theme, light. All right, hope that is better. And I saw a comment somewhere. Love TradingView. I do too, Keisha. Okay, cool. Generally, I like it dark, but okay, I'm gonna make sure that I can follow you guys. All right, so this is gold, but I want somebody to pick a pair that they're maybe in now that they're curious about. Somebody give me a pair that you want me to look at. We're gonna mark it up. Anybody? Don't be shy.
USD CAD.
Okay, USD CAD. All right, so let's look at USD CAD. Okay, USD CAD. All right, cool. Kind of had this one marked up. Let me erase this. Move all drawing indicators. Good. All right, and let's see. Expand my screen a little bit. Okay, let's move this down to the bottom. And we'll have this stuff here. That. Okay, so I want to make sure I maximize my screen as much as possible. Okay, so, all right, so let me take a look at this pair here. There we go. I was looking for that. There we go. A little better. Little better. Let's bring it down. Okay. So, don't have my time frame. So what I do is, let's say I've never really looked at USD CAD before too much, and I just want to get familiar with it. Actually, let me get out this. Okay, that's a little better if I can change it up. All right, so what I do is, just for kicks, let me look on the weekly. Doesn't mean you have to go on the weekly, but I want to kind of get an understanding of what's been happening for the past few months, okay? So on a weekly for the past few weeks, it looks like not only are we on a big uptrend, but right now we're currently on an uptrend, okay? So that just gives me an idea we're headed up, okay? We're headed up. And most likely, if you want to get in this for a long-term trade, it'll most likely kind of reach at least this level up here. Let's change that to maybe a red. Okay. Now, I don't have to mark up my chart necessarily, but for me, I just want an idea of where it may be going. So since it was up here and you saw resistance, it came down here, most likely it's probably going to go for the next couple weeks all the way up to this line before it heads back down for a drop. Okay. So that's just giving me an idea. All right. So let me erase that. Let me go to my daily. This is where I want to start marking up my chart. Okay. I kind of want to see support, resistance, and things of that nature. So I talked about primary and secondary resistance and support. So what I like to do is I first want to mark up where price currently is now. Okay, I mark a line there. Let's not make it so thick. Okay, another one maybe here. Okay, I'll make one maybe a little higher. Okay, nothing big, just a couple spots right there. Maybe I could do one maybe around that area, and maybe one more, not to overdo it, but just to be thorough. Let's look here. Okay, so first I kind of want to go over why, Shawn, why did I mark these areas up? Does anybody see why I've marked these areas where they are? Because that's very important that you guys understand, well, why did he put those lines where he did? Can anybody help me out?
The very top one is resistance.
Okay, so let's see if I can make a couple circles here. Okay, so yeah, so I'm paying attention because here is an area that is touched. Okay. Oops. All right. Come on now. All right. Here, of course, is a small area. Okay. Here's kind of a small area. Okay, so you kind of get the idea. The last 3 data points, or these points here, are kind of consistent to where it rejected this area. So I'm going to mark my point here. Same thing that'll be down here. Now it can go over a little bit, but I'm looking for at least two to 3 data points. That's what we call data point. This is data, and these are different points where it's touching. So I kind of want to mark that up a little bit. Okay, don't always have to be perfect. You just need to have an idea of where market has turned around at. And see, I did this in the most recent, so this kind of gives me, you know, a couple points to look at. Okay, one more, let's see. Okay, so these are just kind of some areas to pay attention to. So that's why I marked the support and resistance. So now, okay, on a daily, I'm also going to make a trend line. Okay, so let's make a trend line. And I'm going to start here. Need to move you out the way. Okay, so does everybody see the trend line here? Let's make it a little thicker. Let's maybe change the color. Let's do a blue. Let's make it a little thicker. Okay, everybody see that?
Yeah, I see it.
Good. So now, basically, to tell you the truth, this is a lot of all I really need to do. I need to identify my support, resistance, and where it's going. So these are the flags. Okay, let's mark a flag. Let's see. That's a flag. That can be considered kind of a flag. This is a flag kind of forming there. Okay, and so I'm waiting for this to pull up and go up to this line, but here's where the big move is. Not these small pips right here. This is on a daily now. Let me see how many pips this is just on a daily. Just to go from where price is here to the top is 89 pips. Okay? On a daily. That's 89 pips right there. That's okay. That's not bad at all. But the big move is what? We saw resistance here. We saw resistance here. And what happened when we saw resistance? It came down, right? It bounced here. It came down. Well, this is what I'm looking for, ladies. I am looking for, I'm actually looking for it to come down and at least get to this point right here. Let's change that color. Let's get another. Okay. Now, doesn't that make sense that once you understand, once you can see what the market is kind of doing, once it comes here, this is how you can catch bigger moves. Now let's see how many pips that is. That's 302 pips. We just identified how you can find 302 pips in the market. Right there on a daily chart. Any questions this far? Don't be shy, because questions help everybody understand. And trust me, I didn't come out the womb knowing this stuff. It was trial and error, but studying to kind of build the eye for that. Does everybody kind of see what we're looking for? Yes? No?
So we would go in for a sell on this one.
You would. What you want to do, though, is you would wait. You would wait on your daily to see if it's going to touch this high and actually turn around. So what I'm looking for is it made this flag, but I want to see in the next few days, when Monday comes, will it come up here and touch this high? And then will it break this trend line to come down? So we still got a few days before that. But if you can pay attention and mark this one down, mark down your USD CAD for a possible sell. So probably by Wednesday of next week, it'll probably touch this high and hopefully it'll come down. Now, it may go higher. You don't know. It may. But most likely we're anticipating that because there was resistance in these three areas here, that most likely it may be a fourth. And if it does, this is the move that we're looking for. And so like Stevenson Linder talks about, we let the market come to us. We let the market dictate what it's going to do. We're not going to try to prophesize to what we believe it's going to do. No, we're going to wait to see the moves unfold. We're going to see the flags reveal itself. We're going to see if it really does touch this resistance. If it touches the resistance and it starts to come down and break this trend line, then we know that we're ready for a sell. But I only want to jump in when I see red candles breaking through this trend line. Then I'll get in. And then when I get in, I'm going to stay in. And then I'm going to ride it down here. And it's possible it could break this and even go lower. It's very possible because it did it over here in the past. Well, let's take a look how many pips that would be if it breaks that level. 427 pips. On a standard lot size, that would be $4,000. Okay, so that's on the daily. Let's break down to the 4 hour. Okay, a little different, but you see the markings are there. Okay. So now you see a little bit more so, right? You see this flag? See that? See that? So if you wanted to, you could ride this up for your 89 pips up here. See, it broke this trend line, came up. When this candle formed, you could have jumped in and possibly ride up here to get those 89 pips. Yeah, almost 90 pips. You could ride it up there, make your take profit maybe about 5-10 pips underneath it, and then jump back in when it breaks this line. You don't just jump in immediately. You want it to break this trend line. And once it breaks that trend line, as soon as you see, let me see what you want to look for, what you may want to look for. You want to look for, let me see. You want it to come here, but it's also, may come back up and retest this, okay? And then head back downward, okay? You're waiting for it to come up here. Then we want to see either it's going to break this trend line and go up, and it may go higher, or it may go to this resistance line and then come back down. And when it comes back down, that's when we want to enter into this sell. And we ride it down for those 200 plus pips. You would just stay in it all the way down there. That's the importance of support and resistance lines. Let's go down to a 1 hour. Now, 1 hour, let me see, where you at there, chart? Let's shrink this up. Okay. Okay. All right, let's blow it up just a tad. Okay. And let me erase some of this right here. Now, where I'll get in on a long-term trade is on the 1 hour. I'll get in on the 1 hour chart. Okay. So I looked at the daily. I also looked at the 4 hour. In the 4 hour, I may make secondary. Let me blow this up. Sorry. I may make secondary support and resistance. And all that means is there's support and resistance underneath the major ones. So let's say I could put, let's see, maybe a resistance line here. And let's make that yellow. Oh no, let's make that green. Okay, so now for me, this is a secondary resistance. Now, why is that? I made the major resistance and support on the daily, but I made this because this is also areas where the market has turned around. Look, over here it's turned around, over here it's turned around, over here it's turned around, over here it's bouncing off. So even though it may break here, I have to pay attention that it could turn on me here because this in the past was a secondary support line. But if it breaks through this, then I can pretty much ride this on down. So I know this is a lot, again, but really all it is just looking where market has turned around in the past. And all I mean is immediately. I mean, just looking right here within the last couple days or few hours or whatever the case may be. Doesn't mean you have to go way back 6 months or, all 12 months and all that other stuff. You don't have to do that. You just have to look where current price is and just immediately go back just a few reversals back just to find out what market has done, because the market follows itself after an immediate pattern. And so what I mean is, it just kind of follows what it's done very recently. Now, of course, if you study it all for months or long term, yes, you'll see that there are patterns, monthly patterns, there's 6-month patterns, there's yearly patterns that maybe at the beginning of the year starts off high, at the end of the year it winds up where price is low. And yes, you could stay in a trade for an entire year and make over 6 or 7 figures just staying in a trade. But for now, we're kind of learning structure so it can help us become comfortable as far as where we believe market may go because of the habits of the market, the structure of the market. And again, looking at the RSI on the bottom, that helps you also. Okay, it already kind of touched the bottom. This is also look like it's still headed up. So it's a very strong reasoning that this will probably hit and go up to this resistance line for these 89 pips. So it's possible, again, you could ride this up for a buy, and then you want to get out right before that area. Okay, so it doesn't draw back on you too much, and then get out. And then you want to wait for it again to test this area and come back down. And when you see it come back down and break this trend line, you can jump in this for a long-term sell. Okay. Now, I would jump down to the 1 hour, and I'm going to enter on the hourly chart. I'm going to enter on the hourly. Okay. So right now, it looks like it's starting, push back, and it looks like it may be coming back to this trend line. Okay, so what I'm going to wait for, okay, also, let's see, it's possible that this may be, again, another support area too. I'm going to wait till I start seeing some green candles. When I start seeing a green candle form, I may jump back up again and get into the trade. I don't want to enter in a red candle and start going negative, negative, negative. That's when everybody starts going all crazy. Oh my God, I jumped in. I don't know why I'm $100 negative, and did I get in at the wrong time? Well, you look at your entry, you look at the 1 hour. So what I want to do is when it starts going green and starts going up, I want to enter. And most likely, I probably want to enter one over this high part. Let me kind of highlight that a little bit. I didn't mean to do it that big. Let's make a small line. Okay. Okay, not bad. Let's see. Okay, this little area right here, I probably want to get in when I see a green candle go above this area. So like Frankie, who just started using more pending orders, I would probably put in a buy stop at this area right here, because what I'm waiting for is it to go back up, but I don't want to have to wait for it. Instead, why don't I just put in a pending order here? And put in a buy stop pending order. Okay, that's where I would put my buy stop. So when it turns, I can catch it. I can catch it on the way up. And remember, it made a pullback. I want to catch it above this so it doesn't keep me negative. I'll go positive and I'll go up. Now it's going to pull back again, but hopefully it'll just come back to this trend line and continue to go up for those 89 pips. Okay, that's how you can use a pending order if you wish to do so. You can either wait for this to come back to the trend line, and when it starts going green, you can jump in, or this is that point I told you, you could jump in once it passes this point, this pullback point, and jump in and go up for the profit. Okay, and then you would put your take profit. You could do a 20 pip, you know, take profit. You could do a 50 pip take profit. You can choose how much you like to do, or you could just ride it up as much as you can before it starts to turn on you. So you have options. Okay, you don't always have to go 50 pips. You can just make it a goal and follow a trading plan and just say, I'm going to do 10 pips a day. I'm going to do 15 pips a day. I'm going to do 20 pips. You know, 20 pips is pretty good and conservative, and it grows your account significantly. So what I would do is I'd do a buy stop here, and then 20 pips from that, I would make my take profit. And then, boom, I kind of got it. And then if it's still going up, I could do another one, do another jump in and do another 20. So I've done 40 out of the 80 pips. Okay, so I just want to kind of show you that there's options to trading, that you can scalp it. You know, you can wait till it comes here and just do 5 pips and get out and do a high lot size. You could do a, you know, a $10 lot size, $100 per pip, and then get in for 3 to 5 pips. When it comes through here, you know, make $500 and get out. So, any questions? I know you guys have questions. Please feel free to share the questions. I know this is a lot. What you guys got? Anything? Nope. Confused?
I understand a little bit better, Shawn. Thank you.
No, it seems pretty clear.
Does it? Okay. Okay.
Hey, Shawn, I got a quick question for you. It's something simple. On the trading view, you know, at the bottom where it has the refresh button with the plus and minus sign.
Right here?
Yes. Mine only showed the refresh, the reset. I don't have the other ones on there. How can I get that on mine?
I don't know. This is the free version. It usually comes with all that.
Oh, wow.
But I think if you right click, I think it gives you the same options too. I think. Let me see. Where did that? You reset chart. It has that. I don't know. I don't know. But all these are is just kind of expand, zoom in, zoom out. But you have a zoom in up here too.
Okay.
I think. Yeah. Let me see. Is that a zoom? No, I had a zoom option. Oh, I can always zoom it with here, with this zoom in right here. And I can just highlight an area and zoom it in if I want to. And then I have a minus to zoom it out.
Okay.
So you have that option here on the side. And also how I calculate the pips is you see this ruler where it says measure. I hit the measure. It comes to like a target. I just put it where I want, tap it, raise it up. And then that's how I can tell. And then that 63 is actually 63 pips right there.
Okay.
So
Thank
yeah,
you.
that's how you can use that part. Okay. And remember, like I said, let the RSI start to be your friend too. Stochastic does the same thing too. That kind of helps you with reversals too. So let me share that. The RSI, again, with the 70 and the 30 line. Again, if it's over 70, that's to tell you that momentum, that's in a buy momentum, that's going up, buying, and that momentum is starting to slow down. And when it starts to curve back down, that is the indicator to let you know that it's reversing. Because not that it's just over the 70, because it could still hang over the 70 and stay there, and the market can still go higher, and higher. All right. So don't jump in for a sell just because you see it over the 70. You want that line to start to curve back and head under the 70. That's how you start to know that it's starting to turn on you. And then you want your confirmation. You want to wait for your sell candles to show up. Okay. When you start seeing the red candles and you see your RSI turn down, then that would be a good indicator for you to know that this is a sell. If I remove this indicator, I'm going to add the stochastic. Where is my stochastic? Nope, that's not it. There we go. Indicator templates. Well, they changed it on me. Let's see. Oh, guys, I'm going to go back to my dark here because I'm more familiar with that. Let's see. Oh, okay, much better for me. Let's see, where are my indicators? That's my templates. There we go. Now I can see that. Stochastic. All right, so on my stochastic here, this is for Takesha, so you know if you use a stochastic indicator, it has the 80 and the 20, and it kind of works the same way. If it's over the 80, that shows that its momentum is starting to slow down. And look how it curves over. See, it's curving over. Not only does it curve over, but you see the red signal line is crossing on top of the blue. And by doing that, that's letting you know that it's going into a sell. So that is also a great indicator there. Let me see if I can blow that up for you a little bit so you can kind of see. No, didn't want to blow that one up. Okay, let's see. Oh, a little better. All right, there we go. So yeah, so it's starting to cross over here, which is a great indicator to let me know that's coming down for a sell. Okay, and remember, we're waiting for it to pull back to this trend line, and then what I want to see on the stochastic is I want to see these lines. I want to see these lines go under the 20 and start to curve back up, just like it kind of did over in this section here. It crossed over and the blue came on top, and that's when it started to come up for a buy. I want to see it touch this line, start to come back up, and then I want to enter in and ride it back up if I can. So that's kind of how you can use the indicators to kind of help you as far as that's concerned. Let's look at the cloud. I know the Ichimoku cloud. Okay. All right, let's see. Let me switch back to white because I know that's easier to see. Okay.
Oh, what is that?
All right, so we still have our structure, but look, okay, we were up in a buy, which is what we're looking for. The trend line is going here. It's starting to flatten out, so it looks like it's going to sell and maybe kind of flatten a little bit. I want to see it go above the cloud to go back up in a buy. I would like to see. But even look at structure. It still follows, even though it's the cloud. Look at my trend line. My trend line follows the cloud. See how it lies underneath? Boom, it touches there, touches there. So you can use structure with the cloud. Okay. Yes, it's pulling back now, but we're looking for it to go above. And look, even though I didn't have the cloud, look where my buy stop pending order is, right with this line here. So I'm pretty much almost on point without even having the cloud. I still can enter it once it crosses over the cloud and get in and go up for those 80 pips. See, so you can use the cloud with that. I used another tool, and I'm just, again, this is just for introduction so you guys can play it later. I used the blue skies indicator. I know you guys are like, what is blue skies indicator? I'll show you that here in a second. I had that on earlier as one of my tools, and I'm starting to work with that, and it kind of tells me when to buy and sell. Okay, so let me switch it to dark because I kind of like the dark again. All right, this one is called Blue Sky. Blue Sky. It's called Blue Sky Day 90% Strategy. Blue Sky Day 90% Strategy. So there you go. So when I add it, okay, let's go here. Order off. Nikki, I think you've seen Dr. Kathy use this, right? Blue Sky?
No, she didn't show us the blue sky.
You didn't? Okay, so let's see if it'll.
This is my first time ever seeing it.
Really? Okay. Actually, I apologize. It won't.
Yeah.
Okay, so what this does, I'm sorry. You know what? The market is closed. That's why it's doing this. So when the market is open, what it does is where these, where the green and up here, it's going to say buy and it says sell. And this is also an indicator to tell you when to sell and when to buy. And so I do apologize because I just remember the market is closed. So that's why it's not going to show the buys and sells. But all these areas, it's going to tell you when to buy and when to sell. So when the market opens back up, I want you to at least take a look at it. Again, the indicator is called Blue Sky Strategy. Let me pull it up again so you guys see it. Blue Sky Day Strategy, 90% strategy. Blue Sky Day, 90% strategy. And so when it does that also, it gives you a percentage on the bottom too of the success rate. So if I put a 15-minute and it tells me that it's a sell, it'll say on the very bottom, it has an 89% success rate of going into the sell. So that's another great tool that you guys can start looking at just to add with your structure, okay, when you want to add it to it. So that is what I have. Again, I don't want to over embellish you guys with a bunch of information, but again, I wanted to touch base with you as far as understanding how to properly do your structure, do your trend lines, things of that nature, and let me know if you guys want to do another chart or anything like that. Is everybody good?
Yes, thank you.
All right.
Thank you, Shawn.
Good. Any
Thanks,
questions?
Shawn.
You're so welcome. Anybody have any last questions? Anything they don't understand? Nope.
I don't know. I've been moving and shaking it a little bit through the training. But did you talk about the W? I'm really confused about what a W and what an M is.
Double tops and double
does that even
bottoms?
matter?
It does. It does.
I don't.
It does. Okay, let's see if I can find something. And I'll just touch on that real quick. So what you're talking about, ladies and gentlemen, ladies, is let's see if I can do that. So we're talking about M's, and basically what it is price will come up and touch a resistance line, okay, and then it'll bounce down, touch the resistance line again, and then come down for a sell. That's what you call a double top. Comes down for sell, okay, and then when you reverse it, it's going up for a buy. So I'm trying to see a good double top pattern here. Let's see. Let's see, somewhat. Yeah, this is probably one. Yeah, right here. Let's cover that. So this is going to be one here, looks like. Move format. Okay, let's get rid of that. Let's just get rid of that. But you kind of see that's an M right there, okay? So basically what happens is the market came up, it touched. Let's see. Market came up, touched, came down, touched again, and went down. And so that's what they kind of call a double top. When you kind of see it touch, come down, touch, it came down, and that's what it did. Look, it came down to touch the bottom. That is the indicator. When it's reversed as a W, it does the kind of same thing. You reverse it, would be on the bottom, and then it would shoot up. So this is an example right here of what a double top is. I'm trying to see if I can find a double bottom for you. Do you kind of see that, Nakia? That M or no?
I do. It's kind of almost like the teacup.
Yep, exactly. That's what the teacup is designed off of, the double tops and double bottom, or double tops.
Oh.
So the market tests this line. Let me just bring it down there. So yeah, that's what it does. It tests this line. See, it came up there, came down, came up there again, and boom, that's an indicator that's coming down for a sell. Exactly what it did.
Mm-hmm.
It didn't come straight down, but it is an indicator it's coming down. So two quick tests of the market and then come down. So
okay,
that,
cool.
yeah, so that is what a double top is now.
And I guess the W is the same thing, but just
same thing, but opposite. Let me see if I can find something like that, and then we'll close shop.
Cool. Thank you.
Okay, so that's that. Let's see. Let's find a double bottom.
There's one right there.
This right here. It looks like one.
Yep.
Yeah.
Kind of like a triple. It's actually kind of a triple bottom. So that's it. It'll come down 1, 2, 3, and then it shot up. So there are triples. There's doubles and there's triples. So this one is a triple. So you see in succession how quick it came. It came up 1, 2, 3, and then it shot up, and look, it came up. So that is what you call a double bottom, triple top, all that stuff. Oh, come on now. I'm loving it. See? That's what it did. So it tested, came down here once, twice, 3 times, and then boom, it shot off. Came down again, but it still came up for that. Let's see if we can identify some others. This is kind of one right here. Came up, tested, and look, boom, shot down. So that's one. Quick succession right there, one behind another. Boom, boom. Impulsive move. Came down to get another impulsive move. Okay. See, as you start kind of looking, I know it's kind of foreign at first, but start training your eyes to it, you can kind of start picking it out a little bit. Let's see any more. This one could kind of be one, kind of comes up, test it once, twice, shoots downward. See? Not a perfect one, but it kind of comes up, bounces, bounces again, comes down.
Right.
Okay? Any other questions? That's a great one. Here's one, probably a W. Touch once, touch twice, and shot up. See? Shot up big all the way up here. So we put our line down here. Kind of came down 1, 2, and shot up.
Mm-hmm.
Okay, so that would be a double bottom. And really you would get in after it breaks the top over here. So you wouldn't get in on the bottom, you would touch, and you'd probably want to wait till it comes above this area, and you would jump in, you would have caught all this up here. So you kind of want to catch it above the W, and then it would shoot up. Okay. Any other questions? Okay. Anything else? Just want to double check, make sure everybody's good.
Okay.
All right. Well, fantastic. Okay, good. Well, again, ladies and any gentlemen on the line, I thank you so much. Again, Doug has been doing a fantastic job teaching. I just kind of wanted to step in there and not let a whole week go by without you guys kind of getting some extra training and just making sure that you're clarified on some things. And again, this will be available for replay, so you guys can just check it out in bits and pieces and fast forward to what you want to check out and go from there. And again, I just want you to continue to practice. Again, get into your IML TV, because all of this right here, this is just introductory. Okay, you definitely want to get into IML TV again with Stevenson Lindor, Christopher Derrick, and some of the other ones as far as the advanced training, where they will go over double tops, double bottoms, structure, resistance, all that. Orrin Wright is the one who does the double tops and double bottoms. So for you, that is definitely somebody you want to check out. Orrin Wright is the bomb. As far as teaching that, as far as structure, he catches them all day long. So with that being said, ladies, thank you so much for being on. Again, Team Wealth Builders, we sincerely appreciate you being a part of this family. And if you need anything, please don't hesitate to reach out for a one-on-one, extra training. I know myself, Doug, a few other people, Charlotte, are willing to help you if you need to learn any more info. All right? So with that, have a great evening, ladies, and I'll talk to you later. Yes. Have a great one.
Thank
You too.
Thanks.